think about what's happening in the ASX and Australia more generally, what looks attractive to you?
Yeah, it's an interesting question, and one we're always looking to sort of rotate our portfolios into the more attractive areas of the market. We've had a huge, and this has been a global phenomenon. We've had a big decline in bond yields, so interest rates. The bond market seems to have think global growth has peaked, and that's had a big bearing on global bond yields tracking lower. I think at this point in time, that's impacted some things in some sectors of the market, like the reflation trade. Commodities have been sold down here in Australia. I think that represents an opportunity. So, the last couple of areas that we've added to portfolios is in the commodity space as well as the energy space. Our energy stocks have been hit pretty hard over the last couple of months, and I see those as representing pretty good value here.
We've got all these earnings coming out in the near term in terms of the tech heavyweights, and we're talking, of course, about Microsoft, Facebook, and others, Amazon all reporting. How does that affect your outlook in the tech sector?
Yeah, I think this is obviously a huge read-through for what's happening in these global tech companies, and it's even more topical at the moment given what China is doing from a regulatory standpoint. So we're seeing money move out of China-facing tech into large US-facing tech, and that's why the majority of them are trading at all-time highs. I think this US reporting season to date has been a phenomenal one. Expectations were already high, but we're seeing there's been a huge ability to beat those lofty expectations. So for mine, the large dominant US tech players, they're performing exceptionally well. They should be in portfolios, and we combine Australian equities with international equities, and they certainly feature in our portfolios.
All eyes, of course, are going to be on the Fed over the next couple of days, and worries about tapering and what that timeline could potentially look like. How do you see that impacting markets more globally?
Yeah, a huge thing, Hadley. So obviously it's interesting to think about where the market has moved to in the last couple of months. The market has moved to more aggressive tapering. The market's moved to sort of positioning for the fact that global growth may well have peaked, and that's what we're seeing play out in the bond market. I think it's probably gone too far. The market has sort of moved too far in one direction. I think this week sets up with higher than expected inflation data will bring back into fruition that the concern around reflation, or at least the concept of reflation. And the biggest, the most obvious place to be in an inflationary environment, or an environment that has reflation going on, is in the commodities space, raw materials, etc. So from that context, I think it's really important around how these inflationary numbers pan out. But the market has gotten a lot more dovish in terms of inflation expectations.